Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Thursday, August 3rd, and then we'll see how things look for Friday, August 4th. Had another down day, but it wasn't as intense as what we saw on Wednesday. Our technicals are turning more negative, but there's still some positive things that we can latch onto. First of all, if you are into this, if you wouldn't mind checking out some of the thumbnails that I've been using on the full-length daily videos, and if you want to give me some feedback on that, I would really appreciate it. I don't care if it's positive or negative. You think it's great, you think it's ugly. I just would like some feedback if you want to take the time to do that. Let's go back and talk about what happened. Some comments that we can make. There were earnings that were released after Thursday's close, and in the pre-market, Apple is trading lower and Amazon is trading higher. Of course, that can change at any time. That was just what I saw the last time I looked. The Bank of England on Thursday did raise rates another 0.25%. They're now at 5.25%. Growth did outperform value. Now they were both down, but growth did less worse than value did. On a short-term basis, we still have our weird-looking stochastics chart. Part of it is overbought, part of it is oversold. The middle part is looking more negative. On an intermediate-term basis, we have the PMO studies. The number of stocks in the S&P 500 that are above zero, that's still coming down, but it's at an extreme positive reading. The BPI for the S&P 500, it is now dropping and not quite below 70 yet. On a short-term basis, we also have some oversold things, and this list is pretty long. The Stoch RSI, the Williams Percent R, the CCI 14, the other part of the stochastics chart, and the Force Index. These are short-term indicators that we look at. They're not only negative, they're extreme negative currently. The dollar was down and interest rates were up, and that's kind of what the market's worried about right now. We're seeing interest rates really going up. All of the yield curves that we follow still remain inverted. Sentiment is still positive. At 75 and above, that's when we get extreme. We had been at 66. We got up to 74. Our trend, it is positive, but now we're dropping below the moving average. That means we're in a weakening trend. The green line is declining. The red line's coming up, but the green line's still on top. We're coming down from that 40 level. Our bias is negative because we've had 2 down days now, and I'm keeping our momentum at mixed to negative. The reason for mixed is we still have some support levels, not only in the S&P, but in other indexes. If those support levels hold and buyers start coming in, that could help turn things more positive. The economic reports that were released, we had the second productivity, the preliminary reading. It came in up 3.7%, much more than the 1.7% that they had expected. Last time it was down 1.2%. Unit labor costs were up, but not as much as they had expected at 1.6%. Last time it was up 3.3%. So what we're seeing from this is companies are producing more, but it's costing less, and that could be better for the bottom line. The weekly jobless claims, about what we expected at 227,000. Last time it's 221,000. We are seeing the 4-period moving average decline with the weekly jobless claims. Continuing claims also continue to fall, even though they were up this week at 1.7 million, up from the 1.679 million we saw last week. But again, when you look at the 4-week moving average, it is declining. The S&P Global U.S. Services PMI, the final reading, came in at 52.3. That's above 50, showing slight expansion. Last time it was at 54.4. So even though we're above 50, it did decline from the last reading. Factory orders were up 2.3%, more than the 2% they had expected. Last time it was up 0.4%. The big one was the ISM non-manufacturing, again above 50 at 52.7, not quite as much as the 53 that they had expected. Last time it was at 53.9. Here's the intraday chart. We did gap lower again, right down here to S1, and then we chopped along S1 for quite a while. Then we saw some strength coming back into the market. We actually went above the unchanged level for a bit, couldn't maintain that though, and fell back below the unchanged level and came down and closed a little bit above S1. Here's the intraday chart for the S&P growth versus value. We're above the unchanged level, so we did see some improvement with growth. Looking at the condition of our trend, the line is now crossing below the moving average. That suggests a weakening trend. The green line is declining, but it's still on top. You might want to wait to see what's going to happen with our trend. In the shorter term, we're almost getting ready to cross from green over to red. We're also seeing the ADX below its moving average and declining. On the daily chart, we're still below this pivot level. We lost out on Wednesday, and we still continue to be below that. Down at the bottom, we can see where volume was a little bit below average. Here's a trendline study that I just introduced, where I went from the October 2022 low up to the March 2023 low, and then extended that trend line. Then another trend line from the March 2023 low to the May 2023 low, and extended that line. There's another trend line that we could draw here. Well, we dropped below this on Wednesday, and we still continue to be below it on Thursday. If we continue to fall, we're looking at about 44.50 for support. We're also coming into the news cycle. We topped out. The news cycle started on August 1st. That's when we really started to go lower. The transports are still holding up pretty well. When we look at the transports to S&P 500 ratio, when this is going up, that's more positive for the market. We're also keeping an eye on the 61.8% retracement level. We came down to that, almost hit it intraday, but we're still above that. We bounced up a little bit and closed off of that level. That's positive. We're wondering if this level can hold. Also with the NASDAQ 100, we came down to the August 2022 high and then closed up off of that. That's another level of support. Are we going to be able to stay above this and then go higher? Or if we break through this, that could turn things even more negative. We're also looking at the FANG index, where we went up and set an all-time high, came back down, came up to the previous high, which is now acting as resistance, and have been falling back since then. To turn things back more positive, we want to see the FANG index continue to go higher. If we keep dropping lower, that's going to turn things more negative. Longer term with the S&P 500, we're just a little bit below this resistance line, and we're just a little bit below also with the NASDAQ 100. The NASDAQ 100 to Dow ratio, after getting a really high reading, it's starting to come down. Other times when we were at this high reading, that spelled pretty bad things for the market. Now, we could go down and then turn and come back up. There's nothing to say that that couldn't happen. But right now, this is just giving us a pretty big warning sign. So what's our outlook for Friday? We do have some earnings reports that are coming out. The market will get a chance to react to the reports that have already been released. This will include Apple and Amazon that have now been released. Qualcomm came out a couple days ago, and I believe we're still waiting on Merck. There's no scheduled Fed speeches for the month of August. Our technicals, I'm still kind of keeping it positive, even though I'm a little bit leery to do that. It really should be negative. In the short term, we are negative, but we're becoming oversold, and we're turning more negative in the intermediate term. We're asking ourselves, is this going to last? Is this due to seasonality? But we're still kind of at that tipping point. Technically, we're looking negative. By support, we're still hanging in there, and the market will have to decide what is it going to do from here. Economic reports coming out. We got the big employment situation report that will be coming out on Friday. We're also keeping an eye on the geopolitical events. Right now, it's about inflation and interest rates, and what is that job report going to say? Here's the updated economic calendar for the week. Looking at the Stock Traders Almanac statistics for August 4th, we're neutral to positive across the board, a little bit above 50% for the Dow, S&P, and NASDAQ. We're also watching this. This is for the NASDAQ especially, which also is influencing the S&P 500. We're seeing weakness in the latter part of July coming into the first part of August. Is this going to continue, or are we going to bottom out and then start to recover from that? We will be on the fourth trading day of the month, where we do see some initial weakness coming into the month of August during a pre-election year. So our scenarios, we're going more with the down one right now because technically we are negative. It's watching those support levels that's really more important. The intermediate term is also turning more negative. And again, we're asking, is this going to last very long? If so, how long? And are we really at a tipping point? We're not really going with the up scenario now. We had been doing that for quite a while, but our charts are just showing us an awful lot of negative action. What we're definitely not going with is a sideways trend. Even though the ADX is weakening because it's below its moving average, it's still giving us a high reading, suggesting that we're in a trending environment. The warning signs. It looks like we finally saw this convergence of these shorter-term bearish signals. Is that going to continue playing out? Longer-term trend signals may be signaling a top. That's the S&P 500 weekly chart and NASDAQ 100 weekly chart. We're dropping down a little bit below that resistance. So far, we're wondering, are we going to keep falling, or are we going to be able to get back above that? Seasonally and historically, we are in a weak time right now. The oscillators for the S&P 500 have switched over to negative. We're also watching the negative oscillator on the NASDAQ 100. The VIX is still showing that there's a lot of complacency. It is going up. It went up on Wednesday, ticked down a little bit on Thursday, but overall, there's not a lot of fear in the market. The cumulative new highs and new lows for the NASDAQ are continuing to show weakness. The 3-month yield is above where it was back in 2007. The S&P growth is weakening, but overall, it's still in an uptrend. The weekly pivot that we saw last week, that acted as overhead resistance. We hit that, and we pretty much have been coming down ever since. The parabolic SAR has also turned negative, and we're in earnings season, and that can be either positive or negative. The positive signs, we do have seasonality and setups that are still in the background, and those are positive. The daily special K chart continues to be positive. The long-term equity put-call ratio continues to be positive. We're still above the downtrend channel upper line. We're still in a risk-on posture, even though that ratio's been declining a bit. Lower price levels may provide support, and to me, this is kind of the critical point right now. Are we going to hit these levels and bounce back up, or are we just going to continue lower based on what our trends are telling us from the charts? The S&P is outperforming utilities. The NASDAQ and NASDAQ 100 did break above overhead resistance, and they're above that still, but they're still dealing with this daily pivot resistance. They have not been able to break through those levels. The Staples to S&P 500 ratio is declining. The Russell 2000 and the small caps, as well as the mid caps, have generated recent golden crosses. Small and mid cap growth continues to be positive. The Pring bottom fisher is generating a buy signal. The financial sector, this is new. It generated a golden cross. Seen a lot of weakness in that area. It could be starting to improve. The conclusion, the S&P, it's turning negative. Again, how long is this going to last? If it will last. In the short term, we're negative, but we are oversold. Intermediate term, we're turning more negative. Long term, we still remain positive because we're above the 200-day simple moving average. Thank you. I hope you found this helpful. Please feel free to check out the full-length daily video. Have a great day, and I will talk to you in the next video.